Hello, hello, mic check 1 2. Can you hear me? Hello. Right, I know that you can hear me. That is phenomenal. Today, on this live stream, I'm going to be outlining some analysis for you. So I already did a live stream prior to this one where I was talking about a balanced price range at the bottom and premium wick at the top, and obviously the blue macro in the middle here. And the fair value gap here, this yellow fair value gap, was formed on the monthly time frame, and this bottom fair value gap was formed on the weekly time frame. Just to give you some like underlying context as to what we're looking at here, this is on obviously Bitcoin on the 1 minute time frame. So this macro here has been kindly outlined by my indicator, my trusty indicator that I coded myself with the help of ChatGPT and a few other various sources, such as ChatGPT not signed in, because it gives you completely different answers as to when you have ChatGPT signed in, seeing as that it remembers like I don't really know what information it gathers, to be honest, but it somehow builds like memorable references to you as an individual customer slash client slash statistic, or I don't know what you could refer to yourself as in the eyes of the OpenAI CEO. But anyways, down here we have a balanced price range. What makes this a balanced price range? Well, we have a bearish fair value gap formed there, and then immediately straight away afterwards, overlapping it, we have a bullish fair value gap here. So I don't know if it makes a great deal of difference, the bullish fair value gap being larger, not marginally, but just like slightly larger than the bearish fair value gap. But well, I'm not really sure, to be honest with you. But like, anyways, you can see the bearish fair value gap is treated as inversion. But like before this, oh sorry, prior to I don't know, before this tag here, we never actually had a move back into this inversion fair value gap. Like we never had like a sort of perfect retracement into it before this. So you can see this fair value gap being formed here, and then price immediately goes straight through it and trades higher, like sort of displaces higher from this inversion fair value gap, and we never had like a perfect wick into it, right? But like that's what this is, so it's quite mad. Well, to be honest, like given that narrative that I've just outlined there, I would now actually want to see this high be taken out. That's what I'm going to stick with that bias now. This is my high that I'm assuming is going to be taken out. I've now just really stubbornly outlined a bias. Right. The reason that I think this high is going to be taken out, yeah, is because this balanced price range here was immediately, like, it formed straight away afterwards this whole leg up, right, and formed that high. And then you're telling me we have a retracement back into it for what reason? Maybe like a reaccumulation to then push higher again past this high. But like if we don't have this high broken and then the market trading above this, then what's the point in having this perfect retracement back into the balanced price range? And so this one here is the inversion fair value gap. So I'll put that in orange. That's the inversion fair value gap. And then this is the bullish fair value gap that's going to be in like maybe like a blue or like a teal color. I don't know, who knows. We'll use like this here and then make it look like that. So this is the bullish fair value gap here, right? But together they form a balanced price range. So I'm going to put them both in the same color hue, which was like a dark gray, because dark times are around the corner. No. So like, but the reason I'm putting them in gray is because I'm trying to distinguish the difference between like the entirety of the area to like the red lines in the middle. So obviously there's two separate gaps, and each gap has so two separate like gray boxes, and each box has a red line in the middle. Right, so that's what we're looking at here. And I've said it just before, but each, like both of the boxes together represent a balanced price range. And it's impressive to me how prices come and just literally like tagged the area between those two mid levels, which is just so fascinating. Like, what in the world? And this is on the 1 minute time frame as well, so they're just like a few second candlesticks that have just come into here for a few seconds, and then just displaced higher. But I ask you, viewer, what is the point in that perfect delivery if we don't take out this high? It can only be inducement. So I do believe this high is going to be taken out, but I also think that Bitcoin is going down to 50k, which is way down here. so I don't really know what to believe right now, but I'm not trying to align 1 minute candlesticks with the like, I don't know. I'm not trying to be a break even on 1 minute candlesticks to 50k from where we're at right now. I don't think that's really realistic. But like what I'm looking at now, yeah, is the balanced price range formed down here, and then the sort of the leg after the balanced price range was formed, and then a perfect retracement back into it. Now I honestly want to see this high be taken out, unless this is just like forming structure. Sorry, like forming stop losses to be taken out soon. Like this is like it's like buying inducement, which is gonna be overlapped with bearish candles. It's like they want people to go long here so that they can take the stop losses when price trades lower. So that could be what that is, like a setup for smart money to go short, or like targets for smart money to go short towards. But because like we formed this like price run up here, and this balanced price range is perfectly respected there, I do want to see this high be breached, to be honest, because I don't really see. I don't know. Oh, actually, wait. It just depends what's stronger, right? So if you look over here, you can see this premium wick. Oh, sorry. Wait. So this premium wick here, and I would call this a premium wick because it falls in the top half of like this low to this high. It's obviously above that halfway point right there. So I would call this a premium wick. 1 second. And you can see when price sort of traded lower, it had like a retracement back into this premium wick, but that was only after we formed the balanced price range at the bottom here. So we're kind of like in the middle of the range, sort of like the macro lays in the middle of the range between the balanced price range at the bottom, which is bullish, and the retracement to the consequent encroachment of the premium wick here, which is bearish. So we're kind of in the middle of this now. And as well, we've already taken the low of the macro and we've already taken the high of the macro. So price has every reason to now trade lower, seeing as we've taken sell side, we've taken buy side. Now price can basically do whatever it wants to do, but I don't really understand why this was formed here if we don't take out this high. And as well, I don't know, maybe it's just like more efficient, like maybe it's just for ultra efficient short time, like smaller time frame delivery. Maybe that's why it forms like that, because you can go long off that balanced price range down there. But we're sort of leaving this monthly fair value gap here after like sort of having like some kind of like range into it. So we're kind of leaving the monthly fair value gap there, and then we create this premium wick here and then take out these lows. And we keep taking out lows until we get to this balanced price range here. And then from this balanced price range, we trade back up into the consequent encroachment of this premium wick up there. And then from this premium wick, we trade back into the like range between the two midpoints of each of these fair value gaps that form the balanced price range. So it's mad, really, to be honest. So what I was outlining there is basically the move away from the monthly fair value gap, and then it was like the premium wick here, how we trade lower and take out these lows, and we keep taking lows until we get to the balanced price range, and then it was from the balanced price range back up to the center of this premium wick here, and then from the center of the premium wick back down into the middle of the balanced price range there. So like that is quite mad, to be honest. But 1 second. Oh shit. Oh no. There's too many lines on the chart. For some reason it keeps like the tool selected, and I don't know why it's doing that. It's like just glued to it for some reason. I can't really understand why. I'm very tired. I need to go to sleep soon anyway. The only reason that I'm recording this is just because of the efficient delivery of this balanced price range here. And I just thought it was interesting, to be honest with you, how we're sort of ranging between this wick high and this balanced price range at the low. That is quite mad. I was hoping to potentially like frame an entry in this. So I do still think that Bitcoin is going to 50k though. I mean, it would make sense. But this balanced price range here, it seems like almost too good to be true, you know? Oh, I definitely don't think we're gonna have like really like way higher prices off of this. Surely not, man. There's no frigging way that we're going like stupidly higher. Or not like stupidly, but you know, is this really gonna hold? Like, oh shit, again. Is that balanced price range there really gonna hold until we like sweep this liquidity up into like maybe this premium wick? I mean, it's possible. I'm not saying it's not possible, but But like I was told by a little birdie today that Bitcoin is going down to 50k, and by little birdie, you know, I mean ICT himself. So I don't really like. I mean, I can't. I don't want to argue with what ICT is saying, but I do feel like there has to be some kind of like pull to the market, right? Like I don't know, I don't know. Like we could just short now and take out these lows, but to get all the way down to 50k, it's either gonna take quite some time in a consolidation. But like if we trade higher and then immediately take these lows, then it's like kind of consuming liquidity here and then redistributing to there. So it's almost as if that never happened, and then we just pummel lower. So, but I don't think it'll look like this. Like that's like obviously, but I do feel like it could come somewhere up to. Wait, do I even think that though? Seriously, do I think that? Um, I don't know. We're currently just like sort of ranging in the eighths of the macro at the moment, and we're just waiting for like one of these to give up. But like it's interesting though, like which one do I think it really is? I mean, this premium wick being like retested and like price staying below the consequent encroachment here, that's bearish. But then this balanced price range and how like you have the wick going straight into the sort of range between the two red lines here, which represent the middles of the fair value gaps. That's bullish. So it's really dependent on like which one gives up first, because whichever one gets traded to first, I would probably feel quite comfortable trading then in the opposite direction to that. So so whichever one is traded to first is gonna be a liquidity sweep, and I think like price is gonna but actually maybe this could trade higher for the meantime. Or potentially not. I don't know. But whatever happens, I do think like Bitcoin's going down to 50k, and I want to be biased on that now. Where does 50k sit? See, we were already not very far off it. It's almost as if this whole retracement here could have been the exact move to 50k. So like from this high to this low, and if I put that here, it goes to 47k. Mad. So like the move from this low up to like this 630 price, this green line, is the same distance as what it would have taken to go from to continue from the low all the way down to 50k perfectly. So this retracement does make a lot of sense. And to be honest, you would presume that that would be the real move to here. And all of this is just time distortion. If this is all just time distortion, then you could presume that price would just continuously trade lower. But like, I wouldn't say that like some sort of like move higher wouldn't be efficient. Like, so I think it would be efficient for price to come maybe high a little bit and before consuming this low. But at the same time, like maybe we could like take this low like fast, like we could rapidly take this low, and then price could like retrace higher and like stay in this range for like a long period. Like it could consolidate in this area for a long time and then take 50k. Like there's nothing to say like it's gonna happen straight away. So I'm not sure. But anyways, I'm gonna be going away for like 3 months um to partake in this job. But I haven't actually done the interview yet, so in fairness there's a chance that I might not be able to do that. But I'm gonna go to the interview tomorrow and try and see if I can get the position. So to be honest, I probably won't be trading for like a while, not during the day anyway. So maybe it's like the macro is the only thing I would really be able to trade. It's actually so cold in this room. Wow. Do you know what I realized is pretty cool? You can actually like make videos on YouTube, like live streams under an hour can be translated into like any of the major languages. So like you could actually have like a target audience in a completely different country and just like sort of like get them to translate the videos into their language. Oh shit, which is pretty sick to be honest. Like I do think it's strange, not strange, sorry, but it's just it's funny how price is delivering at the moment. Obviously, how we have the balanced price range at the bottom of the screen, and then the Fibonacci, the black and red Fibonacci at the top is a premium wick that was that later had its consequent encroachment utilized in a bearish scenario. So it's mad how like the macro is just sort of suspended between the two of them. It would kind of be like I don't know. It would be kind of be like being on the DLR in London, which is like the London Underground, like the train, and being sandwiched between two fat guys, and like basically whichever fat guy gets up first, you can have his seat. So pretty much, I'm the macro here, and these are the two fat guys, this premium wick and this balanced price range, and whichever fat guy gives up first, like and leaves, so gets like liquidated first, then I can have his seat, meaning that I'm going to take my positions in whichever one of these gets traded to first. So if we trade to here first, I'll go short, and if we trade to here first, I'll go long. Probably should have gone long out of this balanced price range, but I missed that. I didn't miss it, but like I don't I was observing, but I don't know. I'm gonna go long with my demo account, my paper trading. Oh, not long. Sorry, I'm gonna trade with my paper trading account. So I'm gonna have a start balance of £240, and I'm gonna go short in that premium wick and target this macro. But at the same time, though, the opening range gap started at 414. So everything here is electronic trading hours. So the opening range gap is here. That's the start of the org, and the previous opening range gap is this like brown box here. So what? So the low in this case would form at 414. We're just looking at so everything in here, like so, any trades after 414 is gonna be basically in this brown box, and pretty much need to wait until 9:30 tomorrow morning, New York time, to take any trades in regular trading hours. So to wait for the org to present itself, we have to wait until 9:30. So yeah. And as well, whatever you anticipate the org to be, price like isn't going to be confined to the high and the low of that. So it's probably not going to happen very often where the low of the org is going to be untouched, and then the high of the org also will be like I don't know if that makes any sense. I don't know. So you see how you have the low of the org here, and then price traded up past the close, and then below the low, like for it to stay in that range, and then present itself, like for the org to present itself and consume the entirety of the high and the low that was formed. Like it's just not gonna happen very often. So the org, I mean, where is it now? 414. It's in here. So we've traded below it slightly. I don't know. I have to see really. The org can present itself however which way it chooses, but it's more like how to utilize it after it's already presented itself. So you kind of have the benefit of hindsight in that regard. If I was to go short in here, I wouldn't really want to see price tag the monthly fair value gap again. I would want to see it kind of leave it alone. Like I would kind of want to see this daily candle close below the yellow fair value gap, the monthly one, and then I would want to see the next candle either not even make it to the fair value gap again, or like wick high and close way down here. Or sorry, like wick above it and close down there. As for this, all I would want to see is price to even just tap into it a little bit. It doesn't have to go all the way to the purple line. My eyeball. Ooh. It's a pretty good indicator if I do say so myself. I haven't really mentioned anything about the indicator, have I? So yeah, I've been like coding my own indicator. As you can see here, this is my Pine script, and the indicator will show me the macro, which is this blue line here. Oh, sorry, wait. Hide indicators. So, oh, shit. So it's going to show me the macro there, but I have to put on the projection myself. It also shows midnight opening price 6:30, and it shows the midnight opening price, comma, the 6:30 a.m. 1 minute candlestick, comma, and the opening range gap and its projection, as well as the macro too. That's quite some mad structure forming down there, isn't it? Kind of hurts my eyes a little bit. It kind of makes me not want to go short anymore. Even though I've just been saying that whichever one gets traded to first, I want to go short. But like looking at the reactions of this macro, it's not looking good for anyone going short. Like, but I do still think 50k is on the table, and as well, if I do go short, I don't want to see price really trade into this up here for the next at least hour and a half. So for the next hour and a half, I want to see price stay below that yellow fair value gap up there, which is the 1 month fair value gap. I don't know if the 50% level will be like traded into here. I don't. I'm not requiring price to do that. I don't really want price to do that. I'd rather it not actually consume this high, and then like just only now reach for lower prices. But I don't know how problematic that will be for smart money. See, it could in fact be this high here. Kind of look like that. It could be that high that we should be focused on instead. But the premise of this one is a lot easier. It's also like it's way easier to see. I don't know if this wick actually. Oh no, we actually did. This wick here that we're drawing the premium wick from, it actually traded into this premium wick anyway. So it's kind of like, I mean, if you were to use like the concept of a propulsion block, it's like this premium wick traded into this one. So we could probably focus on this one. And like now we're seeing like a reaction from the lower quadrant. Is that going to hold? Is that enough to go short? We've taken stops above this high. So my eye is on the consequent encroachment and definitely the high of this. But to be honest, I don't really want to see this high be taken now. So I would probably want to frame my entry around the concept of that high not being breached. So my setup would probably look something like, say I was down to like right here, right? I might adjust this because this is just an example, but I wouldn't really want to see price trade above that, and also maybe we could. I don't know. I don't know. Maybe we can see price overpower this balanced price range here, because if we're seeing this be respected, this premium wick and the consequent encroachment reaction into this balanced price range, and then the reaction of this balanced price range failing to trade higher than the lower quadrant of this premium wick, then that kind of looks bearish. Maybe stop loss could be here. But I think a safer stop loss would be there though. But then likewise, a safer entry would probably be the consequent encroachment to this. That's like where you would really want an entry to be. But nicer than that would be to have it here. So maybe that is the entry of all entries. A 15 to 1 from that. There's no fucking way that that's gonna happen. Right. So this is what I put on initially anyway. This nice 3 to 1 right here. But to be honest, I don't know how likely it is for a price to trade higher than the consequent encroachment or this. But we'll leave this on for now. I don't know if I do like the premise of this for like unfolding. Obviously, you have the reaction from the premium wick here, but I feel like I could be sort of underestimating the power of the balanced price range at the bottom there, because that does look very fucking perfect, doesn't it? This, it does look very perfect. So maybe probably wait to go short until price maybe comes up here slightly more. Anyway, I'm gonna mute myself for a bit and just see what happens because I'm pretty tired. Well, how long has this live stream been on anyway? Maybe I'll just end it here. 37 minutes already. Oh, I don't know. I don't know if I really want to have this live stream going for like another hour. I might end this live stream in a second, and then if I do end up placing a trade, I'll make a new live stream and just keep it running and see what happens. It's not really a bad idea. Like, so I might end this live stream here, and then if I end up placing a trade, then I'll put a new live stream on. I've already outlined more or less the reason as to why I would want to place a trade. We have like just a lot of things going on here, to be honest. This bearish fair value gap here, the consequent encroachment of it was not traded to, and then we shorted hard. I wouldn't really want to see price come above this level up here. Like, so I would want to say that this level is probably safe. I'm not 100% sure how much faith I really have in that, though. I would feel quite like comfortable going short here now. Maybe I spoke a little bit too soon there, but like, okay, going short here now. I'm gonna actually put this on, yeah. So, where is gonna be our stop loss? Up here. Targeting the balanced price range down there, but maybe just a 3 to 1. It's roughly a 3 to 1. So we are gonna go for this, but maybe I'll make it so I execute straight away, right? So we are in short now. Our stop loss is going to be £28. And the TP is actually only going to be £36. Now, immediately after placing this trade, I'm regretting it straight away because I'm definitely not factoring in how powerful the fucking macro, like the the shorting at the end of the macro into the balanced price range, and then taking the high of the macro, and then coming into this premium wick here, and then literally just consuming the high. If price trades above this, it'll definitely come up here. But if price trades above here, I don't want to be in shorts any longer for now. So I don't mind going short here. Shall I put my entry on this one? So my stop loss is there. My TP is here. That's more or less correct. Although now I do actually see this inefficiency here. This to this. I don't know. And that is like a unmitigated fair value gap. I'm actually gonna add more into this position now. So I've added more into the position, but you're not able to actually see that. I'm gonna add some more. The red line represents the average price of my orders. So this is now my trade. I'm also actually gonna have a little bit more safe stop loss because so my trade now looks like this. I have absolutely zero confidence in this trade because now I'm seeing this inefficiency up here that also hasn't been mitigated yet. Oh, so maybe I should tighten my stop loss. Confirm. Okay, so I've tightened my stop loss because I can see that if we break this high, we're going to take that inefficiency, so I don't need to have my risk that open. So we're now in a 1.5 to 1. But extended targets, I do like the idea of this balanced price range being triggered. So that would be like my long term, like slightly longer term target. Mm. How can I make it so I can see my orders on the chart? I don't really know how you do that actually. Like, so you can see the arrows of the trades. No, it's not that. It's gonna be on the settings, yeah, isn't it? Trading. One click trading, execution marks. There we go. So I went short up here. I wonder where two standard deviations of the macro would be. One, two. Right, what I'm looking for here now is a wick into this fair value gap. See how we haven't actually traded to it yet. We almost have, but we just haven't. And it is drawn accurately. Wait, is it? Let me check. Is it not drawn accurately? Maybe it isn't. That should be there. And then the high should actually be here to account for that small volume imbalance. So now this is drawn accurately, that fair value gap, but the bottom didn't change. The top just got a bit higher. So we haven't actually traded into that fair value gap yet, which doesn't fill me with a lot of confidence. I'm gonna want to see the price trade into this FVG once more, and then trade lower. I don't think we're gonna go down straight away. I would feel confident to add more positions on anywhere in the black box. So maybe like more sell limits in here. I feel like I'm not the only person that would have that idea as well. I'm probably gonna end up going to sleep and leaving this because I don't want to be awake. Like I'm sorry, I need to be up early tomorrow. Not that I don't want to be awake now. Um, I think we're definitely gonna have one more test of this black box before any like considerable moves lower. So I'm definitely not adding anything on yet. I'm gonna wait for what I believe to unfold to actually come into fruition. So, I mean, like I said, I would prefer price to have come into this fair value gap and at least tag it. and we have two perfect wicks right below. I'm not really sure what the crack is there. But just because I'm slightly in profit doesn't mean I'm going to stay in profit. So it is likely that we're still going to target that black fair value gap before anything happens lower. Maybe, I don't know, we'll see. Haven't got any music on or anything. I'm just sitting in here in silence. Fuck's sake, man. Need to put some tunes on or something. Hello, pineapple. Looking very good, very nice. I don't think that's actually the lyrics to the song, you know. Did it really not trade into that fair value gap? No way. I suppose there's only a 1 minute fair value gap and it could be left open and maybe price not trading into it is going to be a reference point for later on after we take these lows out at the balanced price range. Or maybe we won't even do that, you know? What do I know? I'm only 3 years in, but I'm not saying that to be cocky, by the way. I'm saying like literally, like, what do I know? I'm only 3 years in. Like, a lot of people have experience that way surpasses the amount of years that I've even been alive on this planet. So, is there anything else I could add into this? I mean, I don't really need this purple line on here. This, I kind of want to be black, or at least like a dark grey. I should probably name them. So this is a this is a sell side imbalance, buy side inefficiency on the 1 minute time frame. I'm gonna add some more trades on here. This is a sell side imbalance, buy side inefficiency. Right there. I'm also gonna move my mean entries higher, just so it is aligned with that red line right there. So I'm gonna make that. Where does a 3-to-1 reside? Is that the top of the balance price range? That's where we're targeting. Okay. So my entry looks like this now. Anyway, like I was saying, this is the sell side imbalance, buy side inefficiency. This is also a 1 minute SIBI. Anyways, this purple line is where I was expecting price to push to when we were down here on this macro. This is about as high as I would want the price to go. I don't want to see a price go into this. Or maybe I suppose it can go in here. Shit, can I just move that? It can go into this 1 month fair value gap in yellow, but I want to see it close beneath it. So I want to see on the daily time frame for price to, in the next 54 minutes, close below this yellow fair value gap. I don't want to see price close up inside it or above it or anything like that. I want to see it close below it. I would like to see price now just kiss it one more time and then leave. Just to kiss it, just to tap it ever so slightly and then to leave. Oh shit. Oh, that's not at all what I wanted to see. Fuck. I'm gonna add some more on here. Should I not? My margin's red. Okay, move on. Go on then. My order was rejected. Okay. My order was okay, so I'm in full margin and it's not letting me add anything else onto the trade. So I guess we're just gonna have to leave it. My entries were a little early. In an ideal scenario, we would now be looking for these lows to get absolutely decimated. You would want to see price just in the next 1 minute and 20 seconds decide that it no longer wants to take a high and to just propel towards this low. But then at the same time, I'm not accounting for this 1 month fair value, this monthly fair value gap in yellow. Price may want to reach the consequent encroachment of that, which is exactly where my stop loss is. So maybe I would have wanted to have my entry at my stop loss. And the stop loss in my situation being like the furthest extended target away from current price, which is probably where price is going to go to before then actually retracing. So maybe my stop loss is exactly where the pivot should be. So I guess we'll see. I'm gonna actually, like, obviously I shouldn't, but I'm gonna move my stop loss to here. Okay, that's enough stop loss moving. Just to be on the safe side, because I can see why price would want to come to the consequent encroachment of the monthly fair value gap and then short. I can see that panning out. But like if price did like just trade like one candle above this and not short, then like we're definitely going to come into here. So I definitely don't want to see price trade above that. But for my £240, oh shit, order rejected, order rejected. We will just have to see. Excuse me. I think that candle's just flipped on itself. Oh, okay. This low is what we're targeting. Like that's what we need to see. We need to see this low be broken before we can see lower prices, obviously. And as well, yeah, if we were to extend this trade, I'm also expecting the scenario of 50k to be traded to. So I guess we'll have to fucking wait and see about that. But 50k is gonna give me £6,500 on this trade. And can you imagine if this was the stop loss here? No way, no way. Where would that leave our risk to reward ratio? So the profit level would have to be 50,000, and I think it was something like fucking 27 to 1. Can you imagine? Can you imagine? No, bro, surely not. I do think 50k is a likely target, but I don't think it's gonna happen off these candles. Especially now looking at the hourly chart, we haven't had a candle back into this range yet. So I guess we'll have to see. In fact, where does the consequent encroachment lay in this fair value gap? Kind of exactly where that one is. Okay, well, what about if it's actually a volume imbalance instead? Is it? Yes. At the bottom, it is a volume imbalance, but is it also a suspension block? Looks like a no. That's a firm no. So it is a volume imbalance though, this fair value gap, instead of being a fair value gap. So what it's actually supposed to look like is this low to this here, and somehow magnificently this red dashed line right there, that is exactly where prices just sort of reversed and wicked to just now. So, oh shit. So I'm gonna remove this and keep the red line. In fact, change the color of it to something a little bit more visible, like this. Yeah, yeah. Just probably keep it like that. Right. So this green dashed line here, that's the consequent encroachment of the volume imbalance on the 1 hour time frame that I've just outlined in black. So I'm going to lock that. And then now we should actually start to see lower prices. Can I add anything onto this trade now that we're down here? Yes. How much can I add onto this? Can I add a 0.04? Yes, I'm gonna add a 0.04. Here. Okay. So this 7k, that's just This is not likely, so we need to move that back into the realm of what's possible. Which was, I believe, what we were aiming for was the balanced price range here. But if price does come into the so really the macro low, which is there, and then I need to move my stop to here. Yeah, this now. This is very much so dynamic trading. To be honest, yeah, price might want to come up into this 1 month fair value gap and just wiggle about a bit. I hope not. Fuck's sake, because I need to be getting to sleep, to be honest with you. Right, I'm just gonna leave this run. Oh shit, did you see that close there? Just fuck, that doesn't look good. Oh no, for a bullish scenario, that looks great. Oh, that's terrible for me. Do you think this could be inversion levels now? This and this potentially could be inversion fair value gaps. Fuck's sake. Oh, fuck. Did you see that close? Oh my god. Is that a three drives pattern? Hello, can you still hear me? Hello, hello. Yeah, you can, but I'm sorry if it's like a little bit quiet. There's not really much I can do, but I think that's a three drives pattern here. So you have first high, second high, third high. Now we need to take this way. So there's actually like a measurement framework for the three drives pattern. So I'll need to find it on here. Um, so the three drives pattern. Where is you? Mm, no, it's not this. It's not that either. No. It's here. So, we're going to talk about the three drives pattern. Usually involves the market moving higher as it approaches a certain level of interest. It might form a higher high on that third high. Typically, not always. After that third high, the market will start to trade lower. You can then look for a measured move by considering the low that formed before the first high, and then looking for a 50% range from that low up to the third high. The ultimate objective would be a full redistribution. So, he's saying that the low that made the first high. Oh, but where is the low that made the first high? Is it going to be that one or is it going to be this one? Let's call it that one. Up to the highest high. So it would be this here, which would be three drives target. Three drives pattern target. You can see that there. I'm not gonna make it much. I'll put it in like a fucking grey dash instead. So it's easier to see. Three drives pattern target. Right? Is that correct? We're using this low to the highest high, and then a 50% move from that to that is here. But then once we take out that, that's also a market structure shift. So that could lead to lower prices. Or it could be a liquidity sweep, like only to come to here and then to trade higher. But he said in the what it says here, the ultimate objective would be a full redistribution, which would mean price to come down to the obviously the low that made the first high. So full redistribution would be here, and then the middle of the line is there. So we're looking for this. We would hope for that, and that kind of coexists with the idea of my short entry here. That would be about a 1-to-1. I don't know. I'm just gonna leave it. 1-to-1 would be like roughly around here or something, like about there, somewhere around here. And as well, the three drives pattern target also falls exactly on the high of the premium wick. But obviously, originally I thought I put a sell in for the high of the premium wick, um, which maybe wasn't a good idea. But we'll see the reaction of this three drives pattern. We'll see if we only take liquidity into here, or if it actually decides to continue lower. But as well, we haven't actually traded into that monthly fair value gap at all yet, which doesn't really give me a great deal of confidence. There's one thing I can check here, which would be to look at the Fibonacci, the quadrant levels of this premium wick, and extend. Oh wait, make it black, and then extend this forward. So we can see that the final the final candle there, it didn't take the high, so we've actually just rejected the high at the top there. Can you see that? And we did it inside of this premium wick here. So we've just failed to break that high. Oh shit! I don't know why this says 1 hour premium wick here. We're studying the 1 minute time frame. That's my mistake. Unless that was a 1 hour premium wick. Was it? No, no, it wasn't. But I have buys up here. But I'm also targeting the low. So, oh no, my buys are not up here. My buys are beneath this yellow 1 month thing. But for some reason, she puts the buys up there. My buys are all down here. Oh, mm, oh. So the 1 hour. I'm so tired. I really need to get myself to sleep soon. So I'm interested in seeing what happens once we hit the three drives pattern target, because that exact level also is the like, so basically there's like a convergence of three things happening at this exact price to the left here. So this price 66,145. There are three convergences at that price. So 66,145. Three convergence. I don't know how the fuck you spell that. Three convergences. You have the three drives pattern target. There is also potential market structure shift. And also, it's the 1 minute premium from before, the 1 minute premium archive from before, which is this one here. So there's three things happening. 1 second, just to check my spelling. Spell check. Okay, there we go. So after this level, what am I doing? Are there any other convergences that are overlapping with that? Would you not say that this is a bullish breaker? In fact, it's also the 1 minute premium wick low from here as well. So I'm also gonna put that on there because some people will also have that instead of the lower one. So there's also a 1 minute premium. So there are actually four identifiable things about this one specific price point. Um, is there anything else I can find about this one level right here? I mean, I want to see where the breaker is. So where would be the breaker? A breaker block is the is it not the last bullish candle before the down move? So that would be a bearish breaker. Wait, no. Um, I'm not 100% sure to be honest, but I want to try and find more things about this price point while it's still relevant. Um, one sec. So breaker block. A bullish breaker forms when the market trades lower and makes a short-term low that is violated. Price. Oh, sorry. This is all this isn't exactly how it was taught. This is just ChatGPT's way of identifying it. But like, what does this say? So the bullish breaker is. I don't know. I don't know. I don't feel comfortable trading the breaker right now. Like I need to like actually refine my understanding on that. To be honest with you, probably would help. Oh shit! But if that is a bullish breaker, then that's not good for this setup because I think it will be this to this. Oh shit. And that would be bullish. That like I mean maybe that is the bullish breaker. I'm not 100% like sure. I don't know. But I do see lower prices myself. At least into this three drives pattern target. And obviously the goal would be a full redistribution down to here. So So we've now just perfectly. Oh wait, can you even hear me? Hello, yeah. So we've now just perfectly hit the target that I was expecting. This three drives pattern target right here. So we would want to see a full redistribution of this area of that range. So for price to come all the way down to here. But we were managing to identify these areas, which are literally this line here. So price can now do one of two things. It could either, to be honest, there's also a fair value gap high here. But that's not really that significant, to be honest. Although it did form after, it did form above this high being taken. I don't know. We'll just wait and see. Out of curiosity, what is the exponential moving average saying? Why can we not see it? Where is it? What? Oh, it's because it's set to the 1 hour. So what is the 15-minute look like? We can't see it. The 1 minute. Oh, okay. So we're also targeting the moving average as well here, and then hoping that when it crosses over, then we're gonna see like bearish momentum. So I don't mind at all targeting the moving average, but it just depends what we're gonna see when price does cross over it. So this is the 1 minute. What about the 5? Oh shit, that was the time frame. Sorry. Shit. What does the EMA look like on the 5 minute? See, we're beneath it still. What about the 3? We're on it, and it looks like we're about to just I don't know, maybe have some moves here. Like it's flatlining there, maybe leaning towards the downside. What about the 15 minute? Is that going to be way up here? So we can work with the 5. Also, I just added another position on. That's mad. That I've just seen a video of Moses, a jewelry man called Moses, who created like a little mini hand made out of gold. I don't know if it was like 24 karat, but it was like really flexible, the fingers, and you could like bend the fingers of the hand around like the opal that it was holding as like a pendant for a necklace. It's fucking unreal. It just got sold for 13 grand. I don't know how it's worth that much. It's because gold, man, it's so fucking expensive. Have you seen it? What the fuck? Jesus. Have you seen the reaction from the fucking three drives pattern target? Yes, it was hit, and then what happened? Definitely haven't seen that full redistribution yet. But at the same time, if you were to measure the distance of the three, like of the move that's happened here, this bullish impulsive move, that is probably the same distance as the full redistribution of the three drives pattern. Not quite. Oh, so the range was there, but the movement was in exactly the opposite direction. Oh shit. Bro, imagine being able to close deals for these watches at these prices, man. Like, what? It's rad. Look, we're now back at the 66,145 level that has the three convergences. Four convergences, sorry. It's pretty much. Look, you see that first reaction off this level? They just went from this three drives pan target. And now we're coming back to it again. It's mad. Oh, it's fucking sick. Yeah, emerald goes so well with gold. Like the gold and the fucking green is an unbelievable color combination.
12,000, 13,000. We can put 500 up and down. Mazal? Mazal, baby. Mazal, my brother. Let's get it. Let's see what the freak wins right now. You got heads? You got tails. Good luck, baby. Let's see the dancing today. If you win, you dance. If I win, I hit my nice little salsa. Good luck, baby. Tails. Give it a tails. Let her win. Tails, baby. That's right. Mazal enjoy $12,000. Mazal. Excited? No, that was and you win. So easy. Yeah, and I win. Got the food here now. One and all. I gotta get you back. You're spoiling it today. Just a bit. She won the titles a couple weeks ago, so I think we'll be ambassadors. Yeah. Right, rolling on her wrist. That's gorgeous. Thank you. Does it feel comfortable? Yeah, that's perfect. Already been home. Enjoy it. So, roll the game. This is a Jubilee fan. This is our destination. Alright, Vegas, children. I'm putting big money on my brother fucking Alex Pereira tonight. Now the deal is, if he wins, that means I win big. If I win big, we're gonna go to Brazil and bring it back to the people over there. Let's go, my fucking brother. Shine. Let's get it, baby. Alright, Vegas, children. I'm putting big money on my brother fucking Alex Pereira tonight. Now the deal is, if he wins, that means I win big. If I win big, we're gonna go to Brazil and bring it back to the people over there. Let's go, my fucking brother. Shine. Let's get it, baby. I got myself this Orange Bubble Watson. This is a limited edition Japanese edition. Only 40 pieces worldwide. The difference is the wraparound.